I'll pull up the euro yen here. And the euro yen, as you guys recall, is one that on the monthly and weekly time frames, we've been seeing trend exhaustion. Here's the monthly time frame down here. Here's this incredible impulse move into all of this resistance on the monthly time frame. But so far, all it's done is it has shifted the pace of the buying into that resistance. And we haven't seen strong reversal patterns that are following through on really a multi-week level. We're seeing some smaller pullbacks, smaller corrections, but intraday, we're not getting the larger confirmation of this exhaustion. So despite the 2T and smaller 2T that is developing on the weekly time frame, we're not getting any major reversal off of this. And frankly, I would have thought that we would have expected this reversal to have taken place already. I was trying to look for the smaller time frames to give us a stronger pullback and correction off of this weekly time frame into this support level here based upon this two-wave rally to the slightly higher high on the weekly time frame, and then the double top pattern that also served as a trap on the smaller time frame. So I do think that overall we are still at a really good level of resistance on these larger time frames, but I'm not too aggressive quite yet. I'm playing mostly the smaller reversals that are developing instead. And right now what we're seeing on a lot of these yen pairs is that we are striking some pretty good resistance on the larger intraday time frames. Let me clear this here and show this without the Fibonacci levels in the way. And here we can see the current intraday trend action, where we do have 3 moves underway on the 90-minute time frame within this daily push on the upside, but there's still a potential for a little bit more room to go on the 90-minute time frame. So this can still push a little bit higher into next week, and we're not really seeing any major reversal patterns developing despite coming into larger resistance zone. On the daily chart here of the euro yen, there we go. You can see that this rally is approximately the same momentum as the previous drop on this daily time frame. What's that going to mean is that the level for these previous highs is going to serve as a resistance level. But another major resistance level to watch for will be based on the 90-minute time frame. And on the 90-minute time frame, what we have is an initial rally that consisted of several smaller trend moves, a little bit of a larger correction, and then this continuation move. And the momentum of this continuation move is pretty similar to the initial upswing. So major resistance based upon that will be 100% expansion level. So you can use a 3-point Fibonacci expansion tool to identify that 100% level. And you'll notice that it corresponds approximately to that 23.6 Fibonacci fan, which is basically the upper channel for the current channel that we've seen. So when looking at some larger reversal patterns into next week, I anticipate that if it manages to pull up into this zone here around 136 on the euro yen, that's where we're going to see some of the strongest reversal patterns taking place intraday on the 90-minute time frame for this particular pair. The Swiss yen also showing the same thing. Another one of those yen pairs. You can see that deep V on the daily time frame. Momentum here is a little bit slower on this one as it's done the continuation on the 90-minute time frame. So I expect this to be a little bit slower as it tries to push a little bit higher, but same type of thing. I'm looking for reversal strategies now to develop on the anywhere from the 15-minute to the 90-minute time frame off of highs for corrections on these into next week. Because the momentum is so strong on the upside in many of these, the corrections could easily start off more gradually. And so what can happen is in order to get a really stronger price reversal, we could even see some back and forth at the highs, where we see some traps developing, slightly higher highs, some smaller initial strategies on the 15-minute chart, which are giving us some great strategies on the smaller time frames, but they're not following through quite yet on the larger time frames. In order to get a larger time frame strategy to develop and follow through, more often than not, you will start to see some bigger swings, bigger volatility at the highs before those take hold. That's not always going to be the case. Sometimes it will pull back. It'll play out the volatility through a period of congestion and then can give a continuation, or it can change momentum like that and gradually gain momentum on the downside. But you're not as often going to see a sharp inverse V take hold that really just keeps plummeting. That is less common. Less common, I should say, when you have an average to stronger than average upside move. It is common if you have a slower move to the upside. Then you can see the inverse V taking hold, where you will see stronger follow through very quickly to the downside. Let's look at some of these other pairs here. The Aussie dollar. This is one where we've been looking at the move off of support here with the shift in momentum on the weekly time frame. Again, that allowed for some stronger upside off of the inverse head and shoulders pattern here. Two-wave rally, a little bit of a shift in momentum here on the second wave of upside. And then we're seeing two smaller waves of downside. The second wave of downside is not as big as the first wave of downside, which means that there is a little bit more room on this as we head into next week, where we could see some further selling here into early next week. Even though we are seeing a little bit of initial reaction off of support here. So this could even develop into a third wave of selling next week as well. So overall, I'm cautious on this on the long side. I think that even if it does try to continue to hold this level of support, you're going to be dealing primarily with price congestion. And what that could do is it could even create a shoulder that would lead to a head and shoulders strategy here on the daily time frame. And for the strongest strategy, that would actually be the most ideal. And you certainly can see a continuation pattern developing as early as the beginning of next week based upon a correction that just lasts as long as that previous correction, where we do see the three-wave drop. But something that will be a little bit nicer, I think, for the bears will be to see a shoulder develop here that forms a little bit longer, about as long as this shoulder zone over here. And that would create a little bit of a stronger pattern for the short side. On the bull side, I'd be very cautious on this one because I do think that, while it could conceivably pull up a bit more in terms of price, it's going to be the harder path to follow. We look at the US Canadian dollar. Those of you that follow me over on Facebook, I made a post on this one earlier here today because this one is forming that 2T pattern on the daily time frame where we had a push into a high and then a slightly higher high, creating a trap. At that slightly higher high, we have those three measured highs. Now we do have the widening range here, which is not ideal when you're forming a momentum reversal because it creates support at the lower end of that channel. But at the time, prices were trading right around in here, and that was still a little bit of room to go. But on this daily time frame, this is also a second swing higher, and we are currently in the middle of a sideways trading channel. So what tends to happen within a sideways trading channel is that you tend to get more two swings versus three swings within a trend. So you'll see, for example, here, two swings lower, two swings higher. And so by forming two swings higher, it makes reversal strategies that follow that second swing tend to be stronger than average. So on this time frame, I'm looking more as a bearish bias as we head into next week. Obviously, some of the earlier triggers already took place heading into today, but I would anticipate the potential for continuation patterns into next week. There is the risk that on this daily time frame here, because this is a V low and an inverse V high, it might try to go for another retest before we get a further correction. But overall, this is going to be a tougher one to push higher on the upside. If we go and look at the pound, let's start with the euro pound. What we have on the daily time frame of this is a 2B. An example of a 2B takes place over here where you have a move to a low, then your slightly lower low. It's the opposite of the 2T. And then we have a bigger version here. With a 2B, what I'm looking at is a slightly lower low that creates a trap that can lead to a reversal strategy. Well, this led to a bit of a reversal on the 90-minute time frame. We saw three major swings of upside taking place, a shift in momentum at that third high that created a reversal this week and pullback and a correction this week. Now, a really strong reversal with a 2B will form when you have a low and then a slightly lower low with a change in momentum into that low. So as it hits that slightly lower low, it creates a trap that can lead to really strong, larger trend reversals. Without that shift in momentum, like what we have here on the euro pound, it makes it difficult for a reversal to get established. And when we look at what's going on the weekly time frame, the momentum is also working against the bulls because we're seeing slower, more gradual overall uptrend channels. So this is creating more of a bearish bias. So even though we're working off of daily and weekly resistance at this time, it's more of a struggle for the bulls to deal with these levels. On the monthly time frame, we have a bigger channel that's developing that could potentially be forming in inverse head and shoulders. But right now, the smaller time frame momentum on the weekly and the daily time frames is not offering any support for this strategy. For those of you that are just joining us, so far we have focused upon the individual indices as well as Forex. Next we'll be going into gold and the bonds as well as oil, and then we'll be looking at individual securities. So if you have any questions on individual stocks that you would like me to look at, be sure to post those into the questions box and we will cover those here in just a couple of minutes. Also, if you've missed the session so far, you can view all of the logs for today's session as well as the last couple of sessions by going to tonihansen.com/Friday and then /member. So /Friday is the sign up for the group. You'll receive a lot of free lessons and that sort of thing. And then if you add member to that, you'll have all of the download links so that you can view the most recent sessions as well. Okay, guys, let's go ahead here and look at oil and gold. We're going to start with oil. Oil is something I've been bearish on here recently. If we look at the weekly time frame here to start with, what you can see here is that we've had a really sharp correction back into the lower end of this congestion on the larger time frames. We had a 2T strategy where momentum shifted on the daily time frame into a slightly higher high, created a trap for the bulls. So we turned around and saw that flip with a stronger than average pullback or correction. Now what we're dealing with is a zone of price support. And let me go and look at the daily here. And what we're seeing on this is we've had two major pullbacks and a little bit of a continuation of this. Now, there is room for another continuation of this selling on the daily time frame. And in fact, I was even more bearish on this heading into this week than we ended up seeing. I thought that we would see a little bit better follow through over the last 2 days on the downside than we ended up getting. But we are starting to see a little bit of a change in momentum here over the last couple of days, where the shift is still suggesting that 33 price target on USO. And so I do think that that zone for support is still pretty reasonable as a support level for a target level. Coming off of that level, when you're looking at reversal strategies off of this support zone, what you are most likely to see are going to be shorter bursts of upside, followed by longer periods of correction, and then another shorter burst on the upside. So I do think that reversal strategies will be something to watch for towards the end of probably maybe even next week. But corrections coming off of these support levels, you have to be aware of the fact that we do have a pretty big inverse V that took place on the weekly time frame. And so when that happens, unless you see a shift in momentum at lows, you get bursts of momentum on the upside, and then those can, in fact, turn around rather quickly. So preferably, if you're looking for a more sustainable bounce off of the support, you'd like to see a move off of the support, a longer period of congestion, and then a continuation from that point. So we would see, for example, something like this, but then would lead into a longer period of correction that could sustain a stronger continuation of the rally. Right now, not much to suggest that that is going to happen. We'll just have to watch this over the next couple of months. Here's the monthly chart of USO, and you can see it started to try to change the momentum within here. Here's another example of an inverse V. You can see the short burst of momentum on the upside, pull back another short burst, change momentum here, short burst for a breakout, but once it put in the measured move, it pulled back very quickly. And what the bulls would have really liked to have seen would be another change that would have broken this even stronger on the upside in order to really see the stronger follow through. Otherwise, it really just looks like we're going to be dealing with more months of congestion here on this monthly time frame without any real break in this larger trading range. Unfortunately, I know some of you guys are asking on the futures contracts here on USO. I don't have futures contracts permissioned on this particular platform that I'm using, so I'm not able to pull up oil futures on this platform, but the movements are going to be roughly translated. You can look at also oil as another comparison for what's going on, but again, you can see that primarily the action is about the same. Same thing here on gold. That's why we are looking at GLD and some of these other ETFs as opposed to the futures contracts. For those of you that do trade oil and gold, though, I highly recommend trading futures over the ETFs. A lot of the movements that happen in these securities are taking place overnight. So when you're trading the ETFs, you don't have that advantage of entering and exiting the positions at the most ideal price points. So if these are markets that you do want to focus upon, definitely take a look at the futures contracts for them as opposed to trading these ETFs like the GLD, GDX if you're looking at gold miners, and USO or OIL if you're looking at oil. Here we're pulling up gold. GLD is the ETF we're looking at, Spider's Gold Trust. And heading into earlier this week, we had an equal or measured move on the downside, giving us a really good support level as we were striking the previous lows on the 90-minute time frame. So this is what we were looking at, the next major support level. What's interesting on gold is that overall I've been looking for a retest of the lows on the monthly time frame and the weekly time frame and even slightly lower lows. But we had a interesting shift in momentum a couple of months ago where there were slightly lower lows, changed the momentum channel here, pushed up, and now is pushing back down again. Well, this isn't creating that great pattern I was looking for, the retest of the lows. I was looking for a head and shoulders pattern to bring us back down into the lows. Well, right now, what this suggests is that this could pull a little bit lower here, especially on the monthly time frame, pull up a little bit higher, even establish another higher high again on that weekly and monthly time frame, and then try to go for that monthly retest of the lows. So it's still looking overall bearish on the weekly and the monthly outlooks. It's just looking like it's going to take a little bit longer before it gets there. So I'm still anticipating retesting the previous lows on the monthly time frame. I'm just suspecting that at this point there is a better chance that we could see a shorter term bullish move on the daily time frame and even the weekly time frame, even seeing some slightly higher highs compared to the last several months, maybe pulling up into this 140, 145 zone, probably more 140 than 145 on the daily and the weekly time frame, and then even going to that lower low on the larger time frames. If we pull up the miners were actually more bearish. If we look at that fund here, the GTX, you can see that this has been the case too, even throughout the most recent correction. We're pulling lower here, but it's going to be a little bit easier to try to go for a slightly lower low before this pulls up. I think that we'll still see a kind of mimicking what's happening on gold itself, where even with a slightly lower low, we could see a pullback up here and then another pull lower within a couple of months. So overall, for the bullish side, I would use a lot of caution. I think in short term, it's worth watching for some swing trades to set up on the upside, but it's going to be a greater struggle to really follow through with those more than just a couple of months. If we go now and look at bonds, we're seeing a lot of similar type of action really taking place in bonds, where right now what I was kind of watching for was really a head and shoulders pattern to try to form on this, but it pulled a little bit lower than what you would typically anticipate for a typical head and shoulders pattern. On the monthly time frame, all of the support is a little bit lower, and we're seeing an increase in momentum on the downside compared to the initial pull off highs going into late last year and early this year. So this change in momentum on the downside leaves more room for this to pull lower throughout the next 12 months. Patterns for developing that, though, we could easily again see the same type of thing we could see on gold, where we see another bounce before we get better follow through on that larger bias that it is showing us. So short term, playing some of these shorter term bounces makes more sense to me right now, but at the same time, I still want to keep that larger risk in mind that the momentum is favoring further downside. So shorter term bullish, longer term bearish on the weekly and the monthly time frames. The TBT is our inverse on this. And you can see that's basically showing the same thing. It's looking like it could be developing an inverse head and shoulders, pulling higher, hugging resistance on the monthly time frames. But it's going to really struggle to try to break through that. So pulling back a little bit more and then moving further on the upside makes a little bit more sense to me in terms of what we're seeing right now with the price action. Okay, guys, let's go and look at some of the individual securities that you guys have questions on. So post those in the questions box and we will take a look at those next. So let's begin with, I'm going to scroll through here some of your questions. UBNT. Okay, this is one of those that has been really popular lately. We're seeing definitely a lot of volatility on this one. It's a lot like a stock trades a lot like Lulu, for example. What we're seeing right now is some resistance forming here on the daily time frame. It has that slightly higher high, and it has the slightly higher high on the smaller time frames too. So it hit a 2T, pulled back, and then went for a slightly higher high with a shift in momentum into the slightly higher high. Into next week, the larger time frames are still a little bit more bullish, but we could easily pull back, do another test of the highs before we see a little bit of a larger correction. Hold on just a second, guys. Okay, sorry about that. My toddler is still bringing home all of his daycare germs, so still trying to get over the most recent one here. So, short term, I think this is going to struggle here heading into next week. We might see some slightly higher highs on Monday, but that could easily pull back quickly on Tuesday. One of the problems you run into with trading a lot of stocks like this is that when they do correct, they tend to go very, very quickly and very steeply, which makes them a little bit more difficult to trade. As you can see with all of the tails here on the 90-minute charts, the increased volatility is going to add to that as well. So if this is something that you are long on heading into early next week, I would be aware of the risk that we could see a correction happening on this pretty early on into next week. A larger term outlook is really hard to judge on something like this. I've seen things like this that will kind of put in a base like this, and then they'll just keep continuing and have a really sharp continuation move even on the monthly and the weekly time frame. It's just a lot harder to judge where those larger term time frame targets are going to be. So you have to play a lot of the smaller moves. It's not quite a LinkedIn type of scenario, but it's really similar to a lot of these, LinkedIn, Facebook, a lot of these things where I tend to focus on more of a swing trade bias than any other bias, buying off the support levels, looking for those two-wave corrections, looking for these corrections here on Facebook to buy. LinkedIn is one that I was focused on earlier this week because it had a similar type of strategy developing on the long side where we had, I'll show you this here. We had a two-wave correction on the daily time frame, and then we also had a three-wave move on the last wave where the middle move was substantially bigger than the first move on the downside. And what this tells me is that I'm probably going to get a third move on the downside, but it's going to be shorter than the second move and closer to being equal to the first move. So when it put in that equal move, that told me at that point, okay, it's time to start to watch for reversal strategies now off of the support. We have a two-wave correction on the daily time frame, and we had the exhaustion forming on the 90-minute time frame as well. Well, that reversal strategy came in the form of a double bottom heading into the 13th. And that's the continuation that we've seen at this point, where you get these sloppy channels where they can still be shifting on the upside and still lead to further upside, because this momentum shift here is the first shift coming off of a larger downtrend. So this type of shift at highs signifies a reversal, but when it's the first shift coming off of lows, a lot of times it's basically just a tilted bull flag, and you'll actually see further upside taking place. So that stock is basically one that's going to trade a lot like LinkedIn, and it makes more sense to be watching for plays off of the upper and the lower end of that trading channel. Right now on LinkedIn, I'm still expecting more out of this. As we head into next week, we could see definitely some periods of congestion in between, like we see back in here. But it's probably going to try to pull up into the upper end of this channel into next week. So I did take some gains off of this on today, but I do think that we'll probably still see some more on this into next week. I'm just reading through some of your questions, guys. OUTR, this is not really a stock that I've looked at much. Let's see here. On the monthly time frame, we have kind of an interesting development because we do have a major breakaway on the monthly time frame, and it went for slightly higher highs here, and it's trying to go for a second slightly higher high here on the monthly time frame. I think that we are seeing the potential to try to push for that level. What's going to be a struggle is, does it hold that resistance and reverse because it is at highs, or because it's breaking out? Does this simply serve as a period of congestion that leads to another major breakout on the upside? And I think it's kind of hard to judge that based upon what we're seeing here intraday, because typically a move that will lead to a sharp breakout, a continuation on the monthly time frame, you'll be able to see a shift in momentum within this. So it will be seeing these higher highs, but the pullbacks won't be as strong, and so that can give you a clue that you're going to see a stronger break on the upside. But when we look at this at the smaller time frames, we are still seeing very sharp upside moves within this, where it does manage a very strong recovery. And so this shift in momentum here on the monthly time frames could be enough that it might develop a continuation strategy like that on the monthly time frame. So right now I'm kind of torn on this, because I see exhaustion on the monthly time frame, but I think that the larger potential that is showing is a bit stronger than that reversal strategy that it's trying to develop. So overall, I would be more bullish on this on the long time frame for the monthly and yearly outlook, but you'll want to be a little bit more cautious as it goes into that upper channel levels, because it could reverse sharply off of that zone. I don't think that that's probably going to happen here, but it is something to watch for. Let's see. EDC. Okay, emerging markets here. This has been something that I've been trading a lot over the last couple months as well. And it's a lot like what happened in oil really over the summer because it was starting to develop a low level base. It had a two-wave continuation. I was posting shorts back at this time for continuation. I thought that we would see this pull back into this zone here from 2009. But the momentum just it didn't pick up and hold to lead to the continuation into that level. So when it hit the first major support zone, which was my initial target zone back at that low from back in late 2011, we saw a pretty decent reaction off of that level. And, a two-wave correction off of that level is typical. But what happened was that when it did that two-wave correction, it gained momentum in the second wave. And that really helped change the momentum on the smaller time frame. So what we're seeing now is that this could lead into a longer base that might try for another breakout on the larger time frames. Now, there's a 2T that formed here, which is a reversal strategy, and it led to this pullback here. But we're not seeing a good continuation for that. So if we go back and look at USO, I want to show you what this could develop into in the weeks ahead. This could be like the action down in here, because here we also had a two-wave pattern that was forming with a bias for the downside. But likewise, it struggled to offer any sort of continuation for that move. So that's what we're running into in the emerging markets right now. It's the same type of thing. So we're going to be looking at a market that you're probably going to see some really decent swing trades on right now, but it's going to be harder to get anything past a swing trade time bias for a decent trend at this point. WNR. Okay, so WNR, this is one that I posted on Real Money. And it wasn't just WNR that I was interested in. It was all of these refineries here, these smaller refineries, WNR, DK, TSO, CLMT. Let me show you some of these other ones. Basically, what you're seeing here is CLMT had a momentum reversal type of strategy heading into this week, creating a bullish strategy. And it was also at major support on the monthly time frame. So it was looking for more upside. And with oil prices dropping, that's going to help out some of these refineries. And also gasoline prices are looking to continue higher into early next year. And that's going to help a lot of these out as well. WNR, TSO, a lot of those are basically forming a third wave of upside on the monthly time frame. So what I'm looking for as target levels is even back into some of these previous highs on some of these. So WNR, that's my larger target level on this one. And DK had a Phoenix here this week. It's trying to develop. You can see that it is also at a major support level on the monthly time frame here. And this is forming a Phoenix. It's a little bit steep here to start with, so we could even get another base here. And at that point, that's where I would be interested in entering it as a swing trade with about a 31, 32 price target on that one. So I'd like to see a second pullback or a second correction on that as an entry point on DK. So that's Dalek US Holdings Inc. TSO is another one in the same sector. And that one you can see triggered a continuation here within the last week. But it's also looking for another pull higher here on the monthly time frame. What I liked about WNR, and that's the reason that I took WNR, was because it had the clearest room to move on the weekly and the monthly time frame compared to these other ones. So it had the least upside resistance. Yeah, it was a little bit slower getting off the ground than something like TSO, but it also meant it was the least extended of these as well. So that's why I went with that one as a longer term position. At TSO, I missed the swing trade position on this one. That would have been this two-way correction here. And it's hit target levels right now here into the end of the week. So you'll probably see a pause on this one as you head into next week. But even this one, on the weekly time frame, I think it's really worthwhile to watch for a continuation move on that weekly time frame. MPAA, this is one that we talked about on Tuesday. It was a strategy that set up on Tuesday. I teach a live class on Tuesdays. Oops, wrong. AA. And this was one that triggered right away early in the morning on Tuesday, and I posted it on the 5-minute. Let's go pull that up so you guys can see that. So here was the trigger Tuesday morning that we were following intraday. And it was roughly 15:54. Which on the 90-minute time frame is right around here. And this is one that the reason we talked about this one and focused on this stock is because this is something that, based upon the daily time frame, had a great possibility or probability of multi-day follow-through because of the type of gap that happened Tuesday, whereby it had a corrective move that was similar to a previous correction and then had a breakaway gap. Now, the breakaway gap was stronger than I typically like to see with most breakaway gaps. But in earnings season, I talked about this last week and we talked about this a couple weeks ago. In earnings season, when you see a breakaway gap like this, a breakaway gap being where you have a channel or some sort of larger pattern developing and the trigger for that pattern takes place with a gap, that can lead to really nice multi-day moves. Now, currently on MPAA, we're showing exhaustion, and I think this is something it'll struggle to push higher into next week. We might see some slightly higher highs as we go into Monday onto this week, but the best move in this is already completed. So if you are in this one from our discussion on Tuesday, I would look to have a lot of the gains already in on this one. But this is a type of strategy that is incredibly powerful. For those of you that have taken my Momentum Gaps course, this is one that is a big focus for that course, not only in looking at securities that will have stronger than average trend days and particularly trend mornings, because that is the most likely thing you will see on a gap like this, is a trend morning, but also those that will lead to swing trade probabilities like MPAA here. So this was the core trade that we focused on Tuesday. And I do think that we are at target levels on this one. So for those of you that are asking, on this one, I would be looking at resistance here heading into next week. Let me go through here and look at some of these other questions. Okay, some of these questions you guys are answering, I'm just sending them to you privately because they're a little bit more personal. So check the questions box for them and you will see them posted there. So if you're seeing questions that you would like me to email answers to, be sure to send me an email at toni@tradingfrommainstreet.com and let me post that in the chat box for you as well. One question here is last week I did have a special offer for the three signs of trend exhaustion, and that offer has expired, but we do have one offer that is still available that allows you to still get that at essentially the same price, but it is bundled right now with um, the three strategies. So the link for that is under ToniHansen.com. Under self-study video courses, if you go down to three signs of trend exhaustion, that is the latest course, and you can see that there is still an offer for it to be bundled with the top three trading strategies course. And again, that one is the one that goes into things like the head and shoulders strategy, but teaching you not how to trade it according to how most strategies are taught, but how to improve it so that you actually do have a strong trading strategy. So that is still available, and we haven't completely bumped up the price on the three signs course to the full price. We did keep it a little bit lower here this week throughout the expo, so that this pricing here will be available until the end of next week. Let's see here. Other questions? Thank you, Dr. Durham. Yeah, I am definitely ramping up on the vitamin C and stuff. I, those of you that were in this Friday group last winter, man, I lived in Florida for many years and was basically never sick hardly, except when I traveled when I lived in Florida. And now with a toddler that's entered daycare, of course, who can resist snuggling with the toddler? And they end up sharing everything. Let's see here. Microsoft. Yeah, Microsoft is another one that I'm very fond of. I do think it is a little bit extended here. You can see that on the daily. Obviously, we're at some pretty extended levels on the daily time frame, but I think that this still has plenty of room to move, especially when we go and look at this on the monthly time frame. Here's the monthly, and take a look at what is happening here. We have this really major period of congestion. Started to break higher early last year, had a nice two-wave correction, offering a second breakout here this year. I think this has a lot of upside to it for longer term investors. Microsoft is something that literally I refused to touch for many, many years. I mean, I spent probably most of my trading career having absolutely nothing to do with Microsoft, especially back in this mess, back in here. I just didn't want to touch this thing. It was, you couldn't get decent moves compared to what you were risking. In order to put a decent stop amount, and you had so much whiplash that it was really hard to judge how to base your stop. Well, over the last couple of years, it started to trade a lot more cleanly. It's offering a lot of really nice setups on the daily and the weekly time frame that it simply did not offer for about a decade. So Microsoft is something that I am fond of. I've been trading it a lot more the last couple of years, and I do have this as a longer term investment. Same thing with Walmart. Walmart, of course, is always controversial here, but let me clear this. Pull up Walmart. And Walmart was another one of those that really just did nothing for years. I mean, it was basically in the stock equivalent version of limbo or purgatory even. You just really you couldn't make heads or tails of Walmart and expect any decent returns out of this thing for years, again, over a decade or so. But over the last couple of years, again, it has started to become a little bit better. Now, I don't think that Walmart trades nearly as nicely as Microsoft does now. I think that Microsoft made a better transition in terms of how well it trades as far as those of us that are shorter term as well as longer term traders, in terms of how much return we can expect for our risk, you can see that there's still some decent tails involved here on Walmart. There's a lot of overlap from one day to the next on the daily time frames. And that is something that both these stocks have been notorious for years, and something that I don't like to see and something that I'm trading. So personally, I prefer Microsoft over Walmart, but I do think that both of these have a lot more upside from an investment standpoint. All right, guys, I think that I've about covered everything here today, so let's go ahead and wrap up for today. Thank you guys for making it to today's session. I'm glad that you guys were able to join me today. I'll try to get these logs out to you here as soon as possible. I usually get them edited Friday night, and Vic is able to get them posted on Saturday fairly early, usually by early afternoon. So if you didn't make it to the entire session, then you can go and review them there as well. And also, if you just want to, go back over the educational aspects of the session, then they will be posted there as well. So again, we will not be meeting next week. I will be in Vegas teaching a class during that time, so we won't be meeting next week, but we will be back the weekend following that, which I know is Thanksgiving weekend, but again, it will be recorded. So if you cannot make it, then you can still listen to the recording. So I will see you guys back here in 2 weeks, and have a wonderful weekend, and thanks again for joining me, and thank you for all of the well wishes and posts that you guys have made here tonight. I greatly appreciate them. I'll post that link here again for the class. That is tonihansen.com/trend dash exhaustion. I think it's also available under simply tonihansen.com/3signs. So I'll post that in the room as well. So that is posted there in the chat box, and it's received some very, very favorable feedback so far. So definitely check that out if you get a chance, and I'll see you back here in 2 weeks. Bye, everyone.